Good morning to one and all. Like, uh, I'm so glad you guys chose to join us on a Saturday morning. So we'll be discussing India's convenience economy today. A few months back, we did a webinar on the Eternal as a company for True Blue. You can find it on our YouTube channel. So I wouldn't call this a sequel. This is more of a spiritual cousin to that webinar in the sense that there we discussed food delivery and quick commerce, which are arguably the Indian home services that are getting more of the spotlight these days. As we all know, ride hailing has always been around, your Olas, Ubers, and Rapidos of the world. They've been around for a decade and a half. So, we're going to be talking about the other set of home services, which are often bunched up together and which comes under the ambit of like your urban companies, the Snabbits and the Prontos of the world. So it might be a little like intense in the beginning, but we'll break this down and we'll walk through like what exactly are the services that we're talking about, how they work in general as services, and then how they work online. And our goal would be more than to understand any one company or any one service, would be to understand the greater dynamics that underlie home services and how they were standardized, digitized, and scaled for a country like India. So that's going to be a key goal with this webinar, not at any one particular company. Um, that said, we're going to break this webinar down into two parts. We're going to understand services that are booked in advance, colloquially known as India Consumer Services, as well as like the more recent and upcoming trend of on-demand services. So I'm sure a lot of you might have read about the on-demand service in the news, like a lot of activity going on in that space. Essentially, so let's just jump right into it. When it comes to India consumer services, I just want to give a small disclaimer where we'll be leaning heavily on like how urban company chose to do things so far and how they're choosing to do things. That's mainly because they are the only relevant large listed player who's operating at like a national scale. There aren't any like international peers as well. So we'll briefly touch upon what exactly makes them special. But the idea is everything that we'll be looking at in the webinar would be from the perspective of trying to understand like how the industry has evolved and not focusing on urban companies. That said, we'll just jump right into it. Broadly, for both sections, the on-demand as well as the pre-book, the structure is going to be very similar. First, we're going to understand the market that we're working with, and then we're going to understand the service itself. After which, we might talk about comparisons with like other services based on gig workers, maybe some other industries. But yeah, this is going to be the rough structure. So let's starting with the industry. We start with the home services industry. So this is like a very broad classification that includes a lot of services. We'll in the upcoming slides we'll see what exactly are like an example of those services and how exactly they work. But roughly speaking, over the next 5 years, they're expected to grow at a 10% CAGR. And the market currently is also not very small, right? So it's like already a 4 lakh crore market. So it's expected to double I mean, it was a 4 lakh crore market in 2023. My apologies. It's a 5 lakh crore market now and is expected to move to 8 lakh crores, 8.5 lakh crores by FY 30. So essentially like this would include the unorganized sections, the organized but offline sections and everything, right? So it's a massive market, and I'm sure many of you would be able to contextualize this, right? They're around us like pretty much everywhere in our life in India. So that's the entire market. Now, like obviously, there's no use of just talking about like everything at the same time, right? So we look at some important subcategories. So, like as per some research reports we were able to find, so there's roughly three ways you can split this into buckets. So one would be home repairs. So this would include all kinds of appliance services like your AC service, RO service, washing machine. If it breaks down, some you get serviced, and some of the plumbing, electrician related work, and like a various other services that are akin to these. So that again, as you can see, is also like a 3 lakh crore market, very big, right? Beauty market is a little smaller, and the other categories. So the others category would include like your cleaning, bathroom and home deep cleaning. So like all this would come in the others category. So like overall, like even though these are a lot of numbers, so there are two key takeaways here, right? So one is like all three markets are very big. So these are not trifling sums, and all of them are set to grow at more or less the same rate as the overall industry. So there's no disproportionate growth coming from one particular place. Though all these three are like a little different in size amongst themselves, they are expected to grow at the same rate. So all this included, as I said in the beginning, like the offline and the online parts of the market. So if we just try to carve out the online part of the market, first of all, what we'd realize it's a very small part of the entire pie in India. So even after compounding for the next 5 years, from the 0.8% salience currently, the online part of these services would only come up to like 1.3% of the entire market. And given that the market is huge, like 1.3% is a substantial sum of money anyway, right? So that said, the online penetration again, it's implied at least in market size terms to grow at roughly double the pace the entire industry is growing. And this is not only from research reports, you can see like industry players also commenting on this along similar lines. So essentially, this is the playing field, right? This is what we're working with. An industry that's growing at 10-11% CAGR over the next 5 years, and like the online penetration of it, which is enabling online services to grow at double the rate. So roughly, like again, just to put numbers in context, 5 lakh crore market expected to become an 8.5 lakh crore market by FY30, which is and the online part of it is growing at like around 20%. So this is what we're working with. Now that we've discussed some numbers and the overall market size from a very mathematical point of view, we just look at them from a much more qualitative angle, to understand what exactly makes up these markets that we've just discussed. So roughly, I've again, this is a table that helps us understand what we're working with. And in the last column, I've taken the price for these services from Urban Company. Urban Company, because they are the only service or platform that provides all of these services under the same app or the same banner. So it's much easier to compare these services, on a like for like basis. So that said, what I've basically tried to capture with this table is like to give us a very brief understanding of the things that matter to a platform, right? So like the category and service are pretty self-explanatory. Now, one of the most important things is frequency, right? Down the line, we'll see a little bit more about the actual salience of frequency. And the average price obviously is an indication of how much the user would have to pay per use or per year for all these services, right? So again, just quickly walking through them. Cleaning is like a very standard use case. So that happens around twice, thrice a quarter. Similarly, handyman, though the range of frequencies is a little different here, like AC is only once a year, but a water purifier is like more frequent, and like general handyman services are like very often like subscribed on a need basis, right? So they don't have like a fixed thing, but on average it comes out 2-3 times a quarter. And then beauty and personal care has more variation in terms of how frequently each service is used, but overall it averages to the same number. So roughly, when it comes to pre-booked services, we notice two main things, and this is going to be foundational for understanding these services, right? One is in general, the average price you pay for each of these things is going to be a little high on the higher end, right? We'll see that in the upcoming slide as well, from a different perspective. And the other thing that we need to note is roughly, as a customer, you're going to be going to these platforms maybe a couple of times or like 4-5 times a quarter, right? Which is it's not as frequent as a lot of companies would like to be. And so these are the two key takeaways from this slide, right? So moving on, looking at the same data from another angle. So this is some data we have for Urban Company. Again, reiterating the fact that Urban Company is the only listed company in this place that we have these numbers for. I'd like to highlight how this looks from a user perspective, right? So essentially, what this table has is the annual number of annual transacting users for Urban Company, which comes out to be around 76 lakhs as of FY26, and it's been growing at a healthy clip. And if you notice, we have spend per head here. So that is like how much is a person spending on Urban Company per year, right? It's been growing at a very nominal pace. But the idea is every year, Urban Company has already gotten people to spend around 4,000 rupees on their platform, right? And as we saw in the previous slide, this is not across 40, 50 orders. This is going to be 4, 5 orders, right? So that already gives us an indication that like not many of these services are going to be like very, very low order value services, which is a great advantage from an industry perspective, right? So if there were competitors, we could probably compare this number, but so far, essentially, since they're the only listed player, we can take them as a proxy for the industry, right? And so that's the key takeaway here. Like, no one service from the Urban Company is going to come for a very low order value, and that's very helpful when it comes to economics, which we'll see later on. So moving forward, now that we've discussed like how like these services work and how like they're priced and how frequently they're used, there's obviously like a massive question about, okay, like if they're the only people who did it, why hasn't anyone done it, right? And essentially the next few slides are going to help us understand, like if you take something like a massage or a haircut, traditionally the perception would be that they are very, very like unstandard, for the lack of a better word, right? Like it's very, very neat basis, and you trust the guy who's doing it for you. You don't, there's no price discovery, there's no standardization. You as a customer might not know what your AC requires, so you just have to trust the word of the guy. And there's, among the unorganized players, there's a lot of competition, there's a lack of trust. So essentially, how did some company take this market and basically organize it enough to scale it across India, right? To understand that, we're going to have to understand the concept of micro markets. So this image might be a little intimidating, but essentially it's very easy to read, right? So along the vertical axis, you're going to see a bunch of services, right? Kitchen cleaning, full home cleaning, women's salon. So all these are going to be services. And across the horizontal axis, you're going to see places. So there's Gurgaon, there's like Patna, etc. So what exactly this means, like, is essentially, like as we saw, there's cleaning, there's handyman services, and this beauty for India services, right? So like more often than not, you're not going to have people who can do all these three things in a particular place. So as a platform, if I need to, have a hair cutting service for someone in Tenampet, I would have to solve that separately versus having a massage service for someone in Kodambakam versus having, manicure pedicure services in Nungumbakam, right? So all these three things would need to be managed individually from a supply perspective, that is a service partner perspective and a service perspective, right? So essentially, micro markets is how this entire dynamic is modeled. So as we mentioned, so haircutting Tenampet would be one micro market. Massage Tenampet would be another micro market because it needs to be managed separately. AC service Nungumbakam is going to be another micro market. So as you can see, as per this image, right? As per the data we got from the company itself during the listing, they operate in more than 12,000 micro markets, like combination of service and locations. So this is how they modeled the problem for themselves in order to tackle it. Now, the next obvious question is, okay, now you know how the service works and you've modeled it, but how exactly do you tackle it? So to answer that question, we're going to just take it up in like a couple of parts, right? So one is, in India, there is no like shortage of people. We have plenty of people. It's just that though we might have people, which is evidenced by the great boom of gig economy in India, we might not have people who are skilled at doing a massage or a haircut or a manicure pedicure or like fixing your AC or like checking out what's wrong with your washing machine, right? So what Urban Company did and what sets them apart from many people who tried to do this in the past is that they're like, okay, we have the numbers, let's just train them to do what we need them to do. So uh, this one critical thing, and like it was really difficult for them to do. They developed this capability over like half a decade or so, and they're still getting better at it for newer services. And it's always a work in progress, these things, right? Because new technology keeps coming up and like they need to upgrade themselves to service all these things. So it's a whole thing in itself. But this capability enabled Urban Company to do a couple of things, right? So first of all, and we'll look at it from the perspective of like the company itself, where they don't need to look for specialists to provide an AC service. So if they get an AC mechanic to come onto their platform, it's well and good. But if they get someone who doesn't know anything, they can still train them to become an AC mechanic, right? And this is such an important thing that sets them apart versus every global peer like your task rabbits of the world. So none of them have the bandwidth or even the capability to offer this training. So they just hire experts and then like they are a platform for experts. But offering training to a gig partner is like such a big value add for like your own firm as well as the service partner themselves, which we'll look into later. But essentially, our key takeaway from this one fact should be that in India, uh, like regardless of how you see it, the only successful model for scaling India services has been to have capabilities to train people in home. So this is one important aspect of what Urban Company does, right? So moving forward, okay, now you have people who have the know-how to fix certain things. Then how exactly do you ensure that like uh there's an amount of customer trust as well as like you trusting them to do the job well, right? So there's been a huge information gap in this space for a while in India, where like you just have to trust whoever's coming into your house to do the right thing. So what happens often is the networks are very limited and like it's very predicated on like who you know already, who you trust in your circles, and then like someone they suggest, they're like, okay, they've done a good job at my house, they'll do a good job at yours too. So this is how it has traditionally worked. But what Urban Company has chosen to do is they chose to leverage technology. So essentially, as soon as a service partner walks into your house, they are, first of all, supposed to verify themselves to the app, take a screenshot, and say, "Hey, I am the one who's providing this service." And then they're, supposed to take a photo of a variety of things, like as shown on the image. They're supposed to take the photo of, like the problem or the appliance that they're working on, and then like multiple other things about the products they use on their own. So all these things get cataloged in the app, and Urban Company has worked on the tech for years, and they've developed this ML algorithm that ensures that all of these things are in place and happening as they're supposed to. Now, what this has ensured is consistency in quality of service, right? So you and I might not be hawkishly monitoring all these little things, but when someone does monitor all these things, it coalesces into an extremely consistent service across micro markets, right? So there's no difference in service when somebody's going to be doing it in Patna or Chennai or Delhi or Mumbai or Coimbatore. Is going to be very similar because of the system that they've set up. And when it comes to providing something at scale, right, a service especially, what matters most is consistency, because like word of mouth is very critical for these platforms to multiply the number of users that are on them. And if there's going to be any amount of discrepancy, the service is going to be relegated by the customers as a regional service and not as a national service. So you need to put in the work in order to standardize and make the service more consistent, right? So that's the key takeaway here. Like you have to take something that's like very like disorganized and unorderly, and you had to make it standard and consistent across the country. How Urban Company has chosen to do this and to garner trust, doing the same has been through technology. That's our key takeaway. And just to expand upon this, they've also gone as far as to developing their own tech in order to help service partners as well as help you. So, for example, if you get your AC service by Urban Company, right? So they bring out this device and they measure using this device what exactly is either wrong with the AC or how much like coolant gas is already present in your AC, and it's a part of your bill where they tell you, okay, you had this much coolant, we topped it off this much, and that's why you're paying this much. So all these things build on to the trust that Urban Company has earned, right? And like again, it's not really company specific. If someone else comes on and they're able to build this trust, they'll also be successful in the market and be a great competition to the Urban Company. But like this is what it took, right? Like if there was any gap in understanding how they took a bunch of unorganized services and managed to scale it across India, standardization trusts are very important parts of that equation. That's the key takeaway. Now, moving forward, essentially, the other side of the coin, whenever you're talking about these services and providing them at scale, is like the manpower, right? And as we briefly discussed previously, Urban Company trains the manpower. So essentially, there is already a layer of value add for a gig partner to consider Urban Company over other services where they don't get any such training or there's no upskilling in the equation. But essentially, what this lets them do is get away with like a higher take rate compared to the rest of the like gig services, because they first of all have no pressure when it comes to order value. So as we saw, nearly $1,000 for each thing that you need to get done on the Urban Company. So this helps a lot with paying the partner a decent sum per order, right? Essentially, like what this enables is Urban Company, even though they take more of the order value, they're still able to pay more to the gig worker. And like as evidenced, and like I'm sure a lot of you would have seen some news regarding some protests about from gig workers saying the payouts are not consistent or good. So Urban Company has been able to retain gig workers better than other platforms, mainly because of the pay, right? Because like the entire point of gig work itself, as opposed to a stable career, is the ability to earn money quickly. So, like, obviously, this does not mean gig workers are shallow or they care about nothing less, or they don't think long term. Gig work, like the nature of gig work itself is to provide that stopgap money for them while they get some other things in order. So that's how the managements of all these companies are talking about it. That's how we see gig workers also act, where they payout is like one of the most important things when it comes to what gig work someone like wants to do, right? So in that sense, because of the order value and because of the value add that Urban Company is able to provide, they are also able to handsomely pay whoever's working for them and also take home a chunk better than others. So this is another important aspect of what makes this service standardization possible, where people who are providing these services through a platform or through any other means feel it's worth to pay, work in this industry. So that's one important thing. So moving on, I know we've alluded to other services throughout the presentation, but this is just like an overview of like, okay, like how do these industries look, right? So directionally speaking, obviously, when it comes to like how much money these people take home, it's not strictly comparable because the size of the market is different. of the markets are different, the volumes that these people are driving are different, and like the amount of time these people have been in the industry are different, right? So it's there's not much sense in like just comparing the gross order value head to head. So I've just put together this table to just compare, see some things that might be relevant on the long run, right? So the first thing, or the two things that we discussed earlier about the nature of India services are the two glaring difference between the urban company core services and the rest of the table. Where if you see the frequency of the services availed at is much lower, right? And the average order value of the service is much higher. So when it comes to things like unit economics, right? Urban company, the India services will have no issues whatsoever because per order they're charging a handsome amount of money. So what that essentially means is they will be left with a lot of money even after they pay their the service partners and take care of their overheads. But when it comes to ride hailing across cab, auto, and book, food delivery, quick commerce, e-commerce, and value commerce, the equation is a lot tighter compared to food delivery. I mean, compared to India services. So that's the main takeaway here. But obviously, frequency is very low. And now, just to kind of wrap up India services, let's just understand like what the risks are when it comes to this particular industry. So as we've been like briefly discussing over the last few slides, low frequency is bad for any kind of platform because what that means is people are coming to your app less times in a particular month or a particular quarter, and like obviously, in the specific case of urban company right now, since they have no competition, it's not really a big deal, right? So if you want a particular service and nobody else is providing it, obviously urban company, I mean, you'll go back to urban company. But in a different case scenario, when we're trying to understand the industry and like the quality of a service, quality of the industry itself, having a low frequency is not great, right? Because if let's just say urban company had one or two more competitors, if you were liable to visit one of these things only like twice or thrice a quarter, then any amount of fragmentation of that attention from the user could be like a death sentence for your app, right? And like this is something that needs to be remedied, right? So essentially, if you look at food delivery and quick commerce, though the profitability in the quick commerce, even without all the competitive intensity, is slightly lower compared to food delivery. That is like because of the nature of the services, companies still that quick commerce is a very attractive proposition for them because of the higher frequency, the bigger market, and like essentially they want to capture more attention from the user overall, right? So there's always value to that, which is why the converse of that, which is low frequency, is always a risk when it comes to platforms. So disintermediation is like the next biggest risk talked about. So essentially, this might be a big word, but what it means is you go on Urban Company, you book a plumber. The plumber comes and does a great job. You like the plumber, so you just get his number, and essentially, our thought process is, hey, I know the plumber knows me, the plumber lives close by to me. Why am I paying 30% to Urban Company, right? And it's a very easy line of thought. And like, regardless of what the industry proponents have to say, or like the industry, people who don't have faith in the industry have to say, it is an obvious risk, right? So it is like in the absence of which, so India as a market, disintermediation is like very very strong phenomenon, right? So maybe in some of the European markets you don't have much of this, where people are willing to put the faith in the app or willing to pay for the convenience. There this would be a much smaller problem. But in the Indian market, though this won't be the end all be all or like the death sentence to a company like Urban Company or anyone else who wants to do this, it is definitely a wrench in the plans. Like it's going to slow your growth. So this is one thing that we really need to keep in mind. And then churning is essentially with respect to like the service partners, right? Like the people who provide the service from the gig workers. As we discussed earlier, payouts are critical, and like in general, since they're not bound by the same contractual obligations as some of the more permanent employee or workers are, they tend to have a mentality to just go to the thing that gives them most money in the least amount of time, right? So this is perennially going to be a risk when it comes to gig platforms. But as we discussed, there is some amount of value add, there is some amount of extra pay. So this is a little more attractive compared to other gig services, but churning is still a problem that they have to deal with. So roughly, we've just sketched out like India services as a market, pre-booked a home services as a market. I just try to understand different services, how they work, why if it is better than other kind of platforms or like platform industries, like is it better and like those things. Essentially, since there's a lack of peers, I would have loved to add numbers for other people as well. But I've just added some disclosures from urban companies side, like to just understand how like the financials of these services are going to look. And like as a general thought in this industry, since there's only one player in the more in like established category of home services, and there's like three players when it comes to the on-demand services, but all three are very new. There's going to be a lack of like numbers and financial data that we will be able to analyze, but I'm just going to do my best to walk you through what we do have, right? So essentially, the way you look at it is like the net transaction value is going to be everything that you pay as a user to the urban company, right? So including your tax and like all those things. And then like what urban company takes home after paying the partner, after paying your discounts, after paying tax and all that stuff, what they take home as a part of this net transaction value. That's going to be operations from revenue. And this products is an interesting line for urban company alone, where, for example, if you're getting your hair washed by urban company, right? Urban company also has the service. It opens up the options for the service partners to buy the shampoo from them. So obviously this is contract manufactured and like it's just to help service partners get access to things. Obviously service partners are free to get something else that they want, but there's some quality limitations on what exactly they're allowed to get and all those things. So that's products, if you were wondering. And like roughly there's two important numbers that you need to pay attention to, right? And I'll just quickly explain them. So one is the contribution profit as a share of net transaction value. Now what this is basically the equivalent of like your gross profit, where it's just subtract revenue minus all the variable costs that are associated with the service. So it's going to be paying the service partner, which is obviously taken off in this level itself. And then there's going to be some running costs, because of the platform and some other variables, so payment gateway charges and all those things. Essentially everything that does not scale with the number of orders. I mean, everything that does scale with the number of orders. So if you do 20 versus 200 versus 2000 orders, you're still going to pay a payment gateway fee for all of them, and that value is going to grow, and you're still going to pay your partners, and that value is going to grow at the same rate of your sales, right? And then below that, you will have your employee costs, your marketing costs, all the things that really are decoupled from the volumes that they are doing. So basically, this contribution profit as a percentage of NTV tells you how profitable you are on a service level. So just to provide that service, like you're this profitable. So essentially, when urban company asks for 100 rupees to provide a service, like after the cost of providing the service alone, they are left with around 21% of that money, right? Then after they pay their employees, do the marketing and all, they're left with 4% of it. So this is essentially how you're supposed to read their P&L. And if you're looking at urban companies result, I would urge you to look at these two metrics for now, right? So because if you look at the traditional P&L for these companies, there's going to be a lot of distortion, and like you're not going to be able to fully understand like the numerical impact of like the improvement that they've done and like the trajectory of their services, right? So by all means, you're free to look at the P&L, but this gives you a better idea of the like the actual operations. And why is this adjusted EBITDA, you might ask? So the only difference between adjusted EBITDA and EBITDA for this particular company is going to be share-based expenses, right? As we all know, like tech employees in companies get a lot of share-based expenses, and like though it is a very important part of studying the company itself on the long run, it might not be very useful when you're trying to understand the profitability of the service itself. So, like, this is strictly to understand how the operations are working at the moment. So, from that perspective, it helps to remove the share-based expenses, right? Because the company is doing something, and their initiatives have managed to improve the profitability of the core service itself, but they paid a little more, like ESOPs to their employees. We still need to have a number to capture that improvement. So that's what adjusted EBITDA is. And essentially, what this means is they make 20% after variable costs, and after they take off their fixed costs, it's 4%. So even if this 20% stays as it is, as the volumes grow alone, there's a big chance for this 4% to improve. So that is the reading of the financials that you need to be able to do on the long run, right? Again, so we don't have any competitors, so we're just going to move on to the next section. So this is instant help. There's obviously instant help is what this on-demand service is called, and we'll be looking into this now. So broadly speaking, like again, industry-wise, when you look at it, it's a huge market, and it's a very similar story compared to the other pre-booked services where it's growing at a 10% CAGR, and like the online adoption is also like below 1%, right? So it's not very different, and the market size is going to be marginally smaller, but it's still mind-boggling numbers all across. And again, goes to say that this big number, this which is like a 1 lakh crore to like 1.6 lakh crore, this is going to be online and offline. Only 1% of this is currently like online at the moment. Moving on, like unlike its cousin, pre-book services, on-demand services has a ton of competition, right? So I've just tried to capture like a few important things that might be relevant in order to understand the competitive landscape that we're working with. So essentially here, if you see, right, like the main thing here is just notice when these companies were founded. So it's barely been a year and a half of operations. And if you see the kind of order volumes that they're doing on a monthly basis, so if you take the combination of all these three things, it's like they're doing nearly like 2.5 million orders a month, which is like an insane amount of scale in just like 1.5 years, right? So over the past 2 years, these services went from not existing at all to being subscribed to like 2.5 million times a month, which is like an insane amount of scale, right? And like that is indicated by like the amount of loss that they're doing. So they're obviously burning money, but just to give you a scale of like the sheer pace at which this industry is growing is like mind-boggling, right? And that is clear. So Insta-help is urban companies, and it was founded like later last year. And if you see like they're also losing a bunch of money, and then like they're present across very limited places, as are all these services, but these are a part of the listed company, which means that we have much more information about InstaHelp again compared to the other two services, but we've gathered as much as the numbers are present online. When it comes to Snabit and Prompto, we'll look at them a little in detail, like in the coming slides. But the idea is this: they were started barely a year ago. They're already worth 354 million dollars, and then like $200 million respectively. Obviously, Pronto was started after InstaHelp, and if you see, that's very clear when it comes to the average monthly booking numbers as well, like where Pronto is like not as scaled as like the other two competitors are. But regardless, common theme across all three people are they're losing a lot of money, and they're present in a very small amount of places. So this is like the whole industry is in its infancy, and we'll only see them grow much faster, as evidenced by how much they've already grown in the first few months, right? Then we'll just look at like some of the numbers associated with Snappit and Pronto. So this is just like a table, from Private Circle, just like explaining to us like how much money has been raised. So as you can see, tons and tons of money. So when it comes to VC funding, it's always exponential like this. So they went from like 8 to 50 to 150 to 250 to 500 crores of funding across their seed D rounds, and they're currently valued very richly, right? And similar story for Pronto, but Pronto is much newer, and essentially, like this, what we know of them, they've raised a decent amount of money as well, and they're also valued at around 200 million. So there's that, and this is just a snapshot of just understanding the perception of these companies. So VCs, they were like, you're worth very little, and suddenly they're like, oh no, like you're worth a lot more than we thought you were previously. And like the number around $350 million and $200 million just here as of the last round of funding. So just to understand, okay, they've been getting a lot of attention and VC money recently, as we just saw also on the previous tables. So just to understand about something about how these services work, we'll work off of our understanding of India services first, which is essentially like they also are based on micro markets, but bear in mind, like these are on-demand services, so you don't have the liberty of planning these things in advance. So you have to have much smaller micro markets for the service to actually work, and you need to ensure that your micro markets are in places where demand is also concentrated, right? Until you reach a particular scale where you know you can operate with a little lesser demand, because overall, like in a particular micro market, because overall demand is scaled, right? And then in this service, training is also provided, but the crucial differentiation that Urban Company had, where it had training capability across a wide variety of services which set them apart. This is a singular service. It's just going to be very basic kitchen work or like homework. So there is no real specialization that sets you apart if you can train people to do this. So more of this 3 to 5 day training is going to be like focused on how to interact with the app, and like what are the standard operating procedures to work within the system, and not focused on the service itself, right? So that's more of what the training is about. And obviously all three companies provide this kind of training. And then the next thing is the most critical aspect of this, which is minimum guarantees. So when we talked about India services, I again was very sure to emphasize the fact that the per order cost compared to other gig work is much higher for India services, right? So the amount of jobs a particular service partner would have to take up in order to make a decent amount of money was relatively lesser. So Urban Company or like any other competitor didn't have to step in and say, hey, we'll support you, just help us scale a bit, right? So the approach to how this minimum guarantee works is different across players. So Pronto gives them a fixed salary, Snapit gives them a day-based thing, right? And Urban Company also does something different. So the entire idea here is because the order value is much lower for these services, until and unless the service partners meet a certain volume criteria, they cannot make enough money to justify spending enough time on this service, right? And order volumes can only be supported by demand. And since this industry itself is at a very, very foundational stage right now, there's no real way of ensuring that people will get to do that much work and earn that much money. So companies are stepping in and saying, hey, we'll support you for a bit until the volumes catch up. So that's one thing to be kept in mind. And then when it comes to unit economics, again, we discussed that all these people are burning a lot of money. But since Urban Company, the Insta-help is the only listed player in the space, we only have access to the unit economics for this particular service. Like as you can see in this, even as of Q4, the net order value, that is the order value that you pay post discounts, even for the largest listed player, has been coming down actually. And this is because of the intense competition between these players. And as we saw, there's one arm of a listed player, which is Insta-help, and then two other companies who are getting a lot of VC money. So they're able to burn it for ads and discounts and payouts and all that stuff. So the entire industry is plagued by this, right? So just to understand, so EBITDA loss per order is almost 500 rupees. So they're not making anything anytime soon. So this is broadly how the industry works. Right now, let's just look at the amount of financial data that we do have from this industry. And here the disclosures are much thinner because, according to the companies, they're not at a stage where they break things out. The cost structure has not stabilized enough for them to comfortably talk about them line by line in order to, it's what companies choose to do. But essentially, as you can see, the services are very new. They've just been active since FY 26, and these are the numbers that we do have so far. And again, as you can see, there's a glaring loss when it comes to the service on the whole, right? So it's going to be a recurring theme for the next couple of years because of the competitive intensity of the industry. And for Snapit, we have a few numbers, and obviously these are very distorted numbers because they have no base when it comes to FY24, and they were barely present in FY25. And revenue, if you see, they made 2 lakhs in FY24 and maybe a crore in FY25, which is not really anything to hit home about, right? They're obviously loss making. There's no doubts about that, but yeah. We don't even have this for Pronto because they've not even been around operating in micro markets for a year. So they were not even generating money or revenues for a year so far. So yeah, again, numbers wise, we're out of luck when it comes to these industries because they're very new. And hence, essentially, this is one of the most important takeaways for us, right? So as an industry, if we go off the largest player, India consumer services, which are pre-booked, and the on-demand services like Insta-help are allied services, but they could not be more different in terms of industry structure, right? So when it comes to all these great advantages that the India services business had in terms of its high AOV, its high partner payout, its skill addition, right, and all and its competitive moat, or at least the entry barrier in the form of being able to train people, right, instead of sourcing experts. All those things kind of fade away when you come to India. I mean, when you come to the on-demand services. One thing that I'd like to highlight, with a special emphasis, is the risk of disintermediation, which is much much higher in this service because if you truly think about it, disintermediation is just a function of how close you are physically to a particular person who's providing you service, and how quickly you need them, right? So essentially, when it comes to India services, there is a chance that the micro market is a little bigger and the service partner is not available to service your needs, right? But nature of the service of the on-demand services itself is that a particular apartment complex or a particular 2 kilometer radius needs to have the same 3 or 4 service partners to be available, and availability is also not going to be a massive issue for the exact hour you need them, mainly because the service itself lasts for an hour, but India services could last for longer, right? So, more often than not, once you discover a person who's coming repeatedly through Insta-help to your house or through Snapit to your house, the risk to the platform that you'll just directly contact them is higher, right? So, that's one thing that we need to focus on a lot. Obviously, because of the less value add that a urban company or Snapit provides, the risk of churn is higher if somebody else pays more for that job. right? And obviously, competition is much higher. We've just been talking about how the VC space is very much interested in these services, right? So essentially, that's the lay of the land, right? Where you have India consumer services, which is a very lucrative opportunity, but there's only one player that's operating in that space. But then the bulk of the attention is directed towards this instant help segment, mainly because it addresses one of the most important weaknesses of the India services business, which is going to be your frequency, right? So this has much, much higher frequency, but it comes with a truckload of problems that you need to solve first. So that's essentially the lay of the land. And that's it, guys. So I'm done with my presentation. I hope you guys learned something from this. I was certainly very happy to talk about this industry. Yeah, so thanks a lot. I think you guys can drop off. I'm gonna end the meeting as well.